Hey traders, welcome back to another mindset sharing video. So it's been a while since I post any mindset sharing video on YouTube especially. So today let's talk about 6 types of pain that you must learn how to endure in order to become a profitable, consistent trader. So I always discuss about mindset in particular in our video, and I always talk about how you must have a high pain threshold. Especially to all of my students, I always tell them, if you want to become a consistently profitable trader, first thing first, learn how to become a good loser. Second thing, learn how to increase your pain endurance level. Alright, so what do we mean by that? So why do you think as a trader we are likely to go through lots of suffer, lots of pain, lots of struggle? It's because trading is about you yourself not just facing the uncertain market, probably just a full of probability based market. It's also about yourself. It's about you conquering yourself. How do you find problems, find flaws within yourself? How can you fix it? How can you find solution? If let's say you overtrade, you revenge trade, you are now in a drawdown 20%. How can you make sure you get out of the pain? How can you make sure you eventually get to a new equity high? So these are some of the things that we must face as a trader. So the first type of pain is losing on a trade. So you see, one of the biggest misconception in trading is new traders tend to think high win rate, high success rate equals to profitable, equals to rich. That's usually how the online gurus, that's usually what the signal service provider, the alerts group, they try to upsell you. They want to say, hey, I have a 95% win rate, I have a 99% win rate. Do you think it is even realistic for any trader, especially if you're trading on a discretionary side of trading as a retail trader? Do you think it is possible to achieve a win rate of 90% or even 80%? It is not impossible, but it is nearly impossible. All right. So you see, so as a trader, what kind of success rate are we looking at? Let me go first. For myself, my win rate has always been between 45 to 55%. I'm always being transparent. I'm not going to be bullshit all of you and say, hey, I have a 80% win rate. No, my win rate has always fallen between 45 to 55%. But how am I still become profitable? The key thing is it can all be compensated with a high average risk reward ratio. In the end of the day, as long as you have a positive profit factor, you have a positive Sharpe ratio. If you know how to balance your risk reward versus your success rate, you can work it out. So losing on a trade is something that you cannot avoid. And in fact, traders who seek for 100% win rate, who don't want to be wrong, who don't admit being defeated sometimes on certain bet, are going to end up being unprofitable. And that's what we call arrogant trader, egoistic trader. Why? Because as a trader, you need to learn how to become a good loser, like what I've just said at the beginning of this video. You need to understand that the best losers win in the market, in the financial market. And also, if you don't admit being defeated sometimes, there is no chance that you will improve as well. Imagine being as a trader, every day you go into the market, you're just being correct, you're being correct. And that's when your arrogance, that's when your ego just goes skyrocket. Alright? So before you even think about, I want to become profitable, first learn how to become a good loser. That's our first point. You can't avoid losing on any single position, right? Lots of times I have 5 losing trades in a row, but nothing scary. Why? Because I clearly know how my system works. I know what's my edge. What is an edge? I received a lot of questions asking me about, what is an edge, Neo? An edge is basically just, do you have something that is proven to be profitable, to have positive expectancy in the market? As for example, it could be as simple as you are a trend trader, you only trade breakout, And every time when price retraces to 50%, you are going to use the fib and you ride the next wave up. It could be as simple as that. But how do you know whether if that strategy is going to give you an edge or not? It's through back testing and forward testing. That is what we call an edge. Something that has been proven to be profitable, something that has been proven to give you a slight edge, a slight advantage over the financial market, over the price. All right. So second point, missing out on any trade. Missing trade is probably one of the most, I can say, painful experience. I've seen lots of traders, even including my own trade club members, my students, they always say, hey, I missed out on a position. If I could have got into the trade, it would have been a 10-hour position. But the key thing is, don't link that missing trade, that missed trade, to your identity. It is normal to miss out setup. Again, the main reason why you are missing out on certain position could be just because you have strict criteria, or it could be as simple as today you have a strict rule that tell you you're not going to take the setup, and it turns out to be a 5-hour trade, $10,000 trade. Are you going to blame yourself for that? No, you should be proud of yourself because you stick to your rule, you stick to your plan. So if let's say today you're looking at a position, you have a game plan, and here comes a trading opportunity, and you look at the market and you say, hey, after some assessment, because of rule A, B, C, D, E, I decided to not put on the position because of A, B, C reason. So you decided that, hey, I'm gonna sit on hands, I'm not going to pull on the trade. Let's see how it goes. Check, move on. And tomorrow when you come back, market turned out to be exactly the way you predicted. So let me ask all of you, was it a good choice to not trade or a bad decision? If your answer is, oh, so bad, it's a bad decision, because if you would have taken the position, it would have been a winner. But the key thing is, if you are thinking this way, you are just transitioning yourself into an outcome-oriented trader. You're no longer looking for the process-oriented. You're no longer the process-oriented trader. You become an outcome-based trader. So what you're looking at is, I missed out on a trade. All you're thinking, that the entire thing that keeps repeating itself is, I missed out 10,000, I missed out 20,000. But the key thing is, you stuck to your rules. You stick to your words, and that's really that's deserving a round of applause, right? So second point, missing out on a trade is something that you cannot avoid, and you must learn how to appreciate that feeling of missing out on a trade. Because again, if you don't have losing trade, if you don't miss out on any position, there's no room for improvement as well. You need to journal the trade, track them down, and really study how can I improve next time. The key thing is moving on, right? Not being stuck in the past. Third thing, this is probably one of the biggest wake-up call that I had was, I finally realized that, I think it was about 2 years ago, that was when I have the aha moment, and I said, hey, no matter how much effort that I put into the chart, I need to understand that there is still possibility that I might still fail for some time. Back then, I still remember, especially on my first year of trading, I was that person that sit in front of the chart 18 to 20 hours a day. What I'm trying to say is I slept really little, just because I really love seeing the market. I love the way that price move. I love how charts behave, all those things. And I was extremely passionate. I was so into the chart up until the point I was just glued to the chart. In one way, all of you can say it was unhealthy. On another side, you can say it was dedication. So I spent most of my time trying to backtest, forward test, just studying different trading style, exploring different things by myself. So despite putting up with so much effort, and I realized one thing, that I was still unprofitable. I was unprofitable. Even on my second years, I made a bit of money, but I was still inconsistent. There were lots of times, even, trust me, even up until today, where I can make 5 figures month, 6 figures month, there are still lots of times where I sit in front of the computer, or the moment I wake up, I look into the mirror, I ask myself, is it really sustainable? Would there be a day where everything just fall apart? Is it going to be someday where I'm going to lose everything back to the market, everything that I have right now? And this has been something that I haven't been able to conquer. I have to be completely, again, I don't think anyone will be so honest to all of you. To be honest, myself, sincerely, I haven't been able to conquer this thinking of mine. Even up until today, when I'm profitable, I'm proven to be consistent. I got 67 students right now. I got 67 Trade Club members. I still doubt myself sometimes. So back to our third point, which is being a trader is all about having a high pain threshold, like what we just said. And you have to truly understand that effort doesn't equal to equal outcome. In trading, effort doesn't mean anything. It is all about experience. It's all about how quick do you wake up, because lots of time we are tangled, we are stuck at a phase where we just keep gambling the market, we keep doing the wrong things, we keep slacking off from our routine. Then that itself could be years of time. All right, I've seen people who traded for 10 years still unprofitable. Are they stupid? Are they bad? No. The key thing is just they are still, they haven't really fixed the real problem yet. Next one will be giving back profits. So one of the pain that you must go through is you will always give back profits. One of the things that I disagree the most is I see gurus sometimes on the internet preaching things like management is everything. And I understand that trade management is everything, but one key thing I want to instill into all of you is no matter how good is your trade management, you will still give back profits. There is no way you can don't give back any profits, because every profits that you give back or every losses that incur on your account is an exchange for potential return. So to say that I don't want to give back any sort of profits, you want to have that perfect management every time, you want to exit at the perfect spot every time, or it runs to 5,000, I want to close that 4.9k before it reverses. You're not going to get that sweet spot, that sweet exit every single time. And there will be lots of time where you, even for myself, I've seen positions where I go to 15,000, go back to my loss, go back to my stop loss, go back to my break even. But I understand one thing, all these are just trials and tiny losses that in the future I'm expecting something in return. So all of you should be thinking the same way as well. Trading is never about how protective you are, how you just want to protect all your profits you have. Despite how good you are at your management or at capital protection, or capital preservation, you will still give back profits on certain positions. Sometimes it runs well, come back against you, left you off guard. It's fine, move on. All right. Next one, tap and run. Tap and run basically means you have a position, hit your stops, immediately reverse all the way to your target. It will happen again, similar to what I just said, like the previous point, giving back profits. A lot of time you have position where you get stopped out by a tiny little bit and reverse against you. And again, it is unavoidable and it's part of the process. All right. Again, trading the market is all about expectancy. It's all about the long-term expectancy. So avoid looking at things from such a short time horizon and really look at things from a bigger picture. I say after 100 trades, after 200 trades, after 300 trades, I want to come out with profit, with positive expectancy, with profits. That's it. I'm not going to sit here every day and say I want to make money, I want to make money, I want to make money. So the last point, the sixth point. So just a quick recap: losing on a trade, missing on a trade, putting in the effort and still fail, giving back profits, tap and run. And the last point will be to to watch a green day or week turns red. Okay, what does that mean? There will be a lot of times where you have a good run on Monday, Tuesday. Let's say you got positive 5,000, positive 10,000. Wednesday, Thursday, Friday just happen to be bad day. And again, just like what we mentioned in point 4 and 5, it is unavoidable. As long as you stick to your rules, you stick to your game plan, you stick to your playbook, you trade setups that really are presenting high quality, these are unavoidable. All right, giving back profits, green day, green week turn into red. It's part of the plan. You can't, if you can ever have let's say we got 52 weeks in a year. Do you think you are going to close all 52 weeks in green? No. But the key thing is, if I can have more green weeks than red, I am profitable. All right. So I hope all of you really learned something new from this video. And if you like it, please don't forget to like, share, and subscribe. And I'll talk to you in the next video. Bye-bye.